Welcome to Profiletraders. This is Reza and you're listening to my market analysis for May the 3rd. We are looking at a chart of E-mini ES here, and I would like to bring the daily chart so that we get a bigger view of how things are going here. So we came up here, we marginally, very barely broke the record high that we had in place, and from the same level of resistance, the 2100 that we have tried to break multiple times and couldn't, we are now seeing a little bit of a pullback. However, the nature of the pullback and the speed of the drop, the amount of the drop, is not indicating at all that we are seeing an exodus of capital out of the market. No need to say that on the way up here, this 300 points rally came completely as a surprise, took everybody by surprise, because on the way up, every single fundamental that was out there was indicating that such a rise to the upside of 300 points after that sharp drop we witnessed in January was very unlikely. But as you all know, market often does the exact contrary of what everybody else thinks. So we are now down from 2100 to a retest of this 2050, which yesterday, or I should say, last week we tested it, held it successfully with a close above it, and then again yesterday, for absolutely no reason, market started to rally back up and closed at a very high. Only last night to hear that the Chinese economic data came out very weak, as if the market really cares about economic data at all. But that was good enough to trap all the longs that were looking so good at the close of yesterday and reverse price entirely to the very low of the day. Then again today we tested 2050 and were unable to break it and closed above it. Therefore 2050 now is definitely the very strong and important level of support. Any given time that we do break that 2050 decisively means that once we break it, we do not want to see any kind of a hesitation. We want to see range of price expanding itself upon the break, and most likely volume increase with that break as well. If we do break like we did today and there is hesitation, lack of follow through, low participation in volume as we can see it on the volume profile, this could and will mean that the break is most likely to be fake. If we do break the 2050 with decisiveness, of course we will have to deal with this low here at 1245 and 75, so that's pretty much the support zone. If we do break out of this support zone, I really don't have anything in terms of support prior to 12 or 2030. So we will see what will happen from here, but again, market has been defying everything and everybody out there. It has been totally, completely ignoring all economic data out, and it has been focusing full-heartedly on quantitative easing from various central banks and our own central bank here, which completely retrieved from its plan to raise rates by 4 or 5 times this year. Nobody believes that Janet Yellen will do anything anymore with the rates. So market is very, very comfortable that this easing of money coming into the market is going to continue, and as long as this comes or that money comes into the market and can finance stock buyback, risk taking, forcing saving money to come into the market in order to earn a higher rate compared to what they can get into the banks, etc., etc., this market will not care at all about business cycle, the economy, or anything else. But will come a day where there will be a little bit of a catch up that will be taking place, but yet we have not seen it. On the upside, of course, if we want to maintain above this 2050, obviously the number one objective would go up there to close the gap, which was yesterday's close at 2075.75. Tomorrow there will be a lot of numbers released, and most importantly we are going to have our unemployment numbers that are going to be due out on Friday. So possibly market will either be in a state of pause till we see the numbers, or if they feel comfortable ahead of the numbers, they're probably going to buy it enough to go fill in that gap. Or if they are uncomfortable ahead of the numbers, then we need to see a break below 2045.75 in order to go and drop towards 2030. Now the interesting part is that crude finally responded to the weak Chinese economic data, and I also told you that it was very likely that we would see 46, and 46 should be monumental resistance, and that was calculated based on this upper resistance band of the channel, and that's pretty much exactly what we did. We came up, I had an upside objective of 46, we did hit that, and now we are on the way down. There will be a little bit of a support at 43. If 43 doesn't hold, we're gonna come for a test of this upper trend line here, and if that trend line doesn't hold, next level down in my opinion will be $40. If by any chance they decide that we are not going to drop and break the 43, which by the way we have a naked POC very close to 43 as well, then the first level of resistance will be 44. If we clear through 44, the same as ES, most likely we are going to go up in order to close the gap, and that gap will be closed at 44.87-89, and a little bit above that we have a POC at 45.10 and then 45.35. And as we can see, we just opened after market here and is trying to pierce through 43.98, but I'm not sure what will happen during the overnight. So this is it for today. Thank you for listening. If you wish to learn market profile, check my courses on my website, profiletraders.com. You also have a free trial to my trading room if you wish to check it out. And wish you good trading, and to the next time.